Hi everybody, Ken Heinz here, HFR President with the HFR 500 February 2022 Performance Snapshot. February was another tumultuous month following the tumultuous month of January, but a good month for the HFR 500 in a very interesting time. Obviously, financial markets sold off again with equities declining and commodities continuing to rise sharply on the Russian invasion of Ukraine. January and February were similar but different in terms of the drivers. We call in January, inflation was the driver of falling equities and falling bond prices and rising commodities. And in February, the Ukrainian invasion by Russia was the driver of performance. The good news is that the HFR 500 posted a gain in February, again driven by macro strategies, which you'll recall was the driver of positive performance in January as well. It's definitely an exciting month for the HFR 500 in February. You can see here, macro, the HFR 500 macro gained 2 7/8%, a very strong gain in a month where you can see here the NASDAQ composite declined by 3.4%. That on top of the decline for the NASDAQ in January, which we're going to talk about in a minute. Overall, the composite gained nearly 1.25%, about 0.5% in event-driven and 0.5% in equity hedge as well. So that's very exciting because for two reasons. On one hand, even the higher beta strategies and the equity hedge and event-driven gained in a month where overall equities declined. Fixed income-based strategies also gained in a month where yields fell after rising in January. But most importantly, again, you saw strong performance in macro. And we talked about this last month. Typically, the drivers of performance in macro are pretty diverse because you have trend following strategies, fundamental discretionary strategies across all types of assets, and then commodity and currency managers from a fundamental standpoint. And so oftentimes, or what you see at some point is you see some of those different strategies, the performance can offset at the sub-strategy level. In February and also in January, all of the engines of macro seem to be working in the same direction, producing a very exciting negatively correlated gains to the declines of equity markets. Drilling down one more level on February into the sub-strategy performance, you can see that the biggest driver of the gain was commodities, which shouldn't surprise many people given the strong performance of commodities, mainly oil, but other commodities as well, certainly rose sharply. 6.3% gain for the HFR 500 commodity index. But you can see here also the HFR 500 technology index, which is equities, gained 2.7%, 1.8% for distressed, and 1.8% for relative value fixed income multi-strategy credit funds. And again, that compares with the negative 3.4% of the NASDAQ for the month. Going back up to the strategy level, but now looking at year to date, it's only 2 months, but it's been quite a, it's really been 2 different market cycles already in such a short period of time. But we see a very interesting result. First off, the NASDAQ composite is down 12.1% in the first 2 months of the year, and the HFR 500 macro is up 4.75%, which is an extremely exciting result for sure. You have a gain of about 71 basis points for fixed income-based relative value strategies, and only a narrow decline for the overall composite, less than 0.5%. We have 45 basis points, and then even the highest beta strategies, event-driven and equity hedge, which were strong performers in 21, down 1.8 and 3.5% respectively for the month. Sticking with the year-to-date time frame, but now focusing on drilling down to the sub-strategy level, we see really a continuation of a lot of the same trends, not only from January, but really from 2021 as well. You recall, if you watch these videos regularly, the leading area performance in 21 was the HFR 500 macro commodity index. And again, year-to-date up 13.8%. That obviously far in excess of the 12.1% decline for the NASDAQ composite. But we also see HFR 500 macro systematic diversified, which is trend following CTA's performance. Nearly 5%, call it 4.8% in the first 2 months of the year, 4.4% for the energy-based materials index. Obviously, a lot of overlap in terms of the beta to energies across these first three, and certainly the 4% gain, a little more than 4% for the large credit multi-strategies in the HFR 500 relative value multi-strategy index. So these are the leading sub-strategy areas in the first 2 months of the year. Again, these topping the sharp decline of the NASDAQ of 12.1%. We have a ton of great information on the HFR 500 indices on our website. Obviously, if you're watching this video, you know we do regular videos on YouTube about the performance of the indices. So please subscribe to those if you are interested. Please visit our website, www.hfr.com. When you go to that, you can click on the investor guidebook there. You can see the methodology and the performance and descriptions and things like that. But I encourage you to look at the investor guidebook. It talks a lot about the HFR 500 and the construction and some of the benefits to investors and how the HFR 500 is really a solution to a lot of common benchmarking problems that investors do have. Certainly, if you have questions or you'd like to set up a call with me to talk more about the HFR 500 or any of the research that HFR publishes, please feel free to email me directly or send a question or email to HFR500@hfr.com. We look forward to hearing from you, and we'll speak next month.